It's the WWJ Industry Connected Podcast, a monthly podcast devoted to the groundwater industry, produced by the National Groundwater Association. I'm your host, Mike Price, and today we're joined by Mac Nehring and Cory Alsip of CVista Leasing and Finance. We discuss the current rate environment, keeping a running debt schedule, different commercial lending options, and more. Welcome to the 10th episode of the WWJ Industry Connected Podcast, a monthly podcast devoted to the groundwater industry, produced by the National Groundwater Association. I'm your host, Mike Price, Senior Editor of the National Groundwater Association's Water Well Journal Trade Magazine, and today I'm with Mac Nehring and Cory Alsip of CVista Leasing and Finance. Mac has written for Water Well Journal on how to lease your next drill rig, and he presented at Groundwater Week 2023 on business management, and Cory is his colleague here. And guys, welcome to the podcast. Please introduce yourselves.
Yeah, thank you, Mike. Mac Nehring, like you said, CVista Bank, specifically work in the groundwater industry doing equipment financing. The contractors in the industry have large equipment needs. Sometimes the price point's a little high. They come to someone like us to work on financing. Personally, I always say it's one of my favorite industries I work in. I think the equipment is really cool. Sorry to be so casual, but it's a very cool industry. It's
Yes,
neat equipment. It does something that's very valuable. People need water. So it's something I really enjoy working in. And so, yeah, we've been kind of targeting this industry for about 3 years. Cory works with me. Cory, I'll let you introduce yourself.
Yeah, thanks, Mac. Cory Alsip, of course, CVista Leasing and Finance. I'm the vice president of sales and asset management, so I have two functions here. I've been in lending for 20 plus years. I've done all kinds of loans, from auto loans and mortgages on the consumer side. Got into business banking and commercial lending after my stint in kind of retail banking, and been specifically working in the equipment finance industry for about 6 years now. As I said, I not only do sales, but asset management. And one of the things that has been terrific about Groundwater Week and being involved in this industry is the amount of knowledge that I've been able to gain. So we're happy to be here, happy to be a part of the conversation today, Mike.
yeah, appreciate you guys jumping on and sharing some knowledge with us on the current market environment, the current rate environment. We should start with, what can you tell us about rates should be dropping in the near future? Let's start there.
Yeah, so the good news, I'm sure everyone listening is be very happy to know rates are coming down. So the Fed just dropped the rate 0.5 point a couple weeks ago. So that's encouraging. I think the one thing I always say anytime I talk rates with people is no one has a crystal ball, right? But based on things that Mr. Powell says, based on things the Fed does, you kind of have an idea. But I always throw that caveat in is no one has a crystal ball. But in general, we're expecting rates to probably slowly trend downward through the end of the year, hopefully into next year as well. I know mortgage rates have also been dropping. I think mortgage rates are a full percentage lower now than they were a year ago. So in general, I think the trend from a borrower's perspective is very positive. I think that's something hopefully we continue to see. Cory, do you have any perspective on this?
I think that's pretty good, Mac. I guess the thing I'd probably add in there is that, in the industry, they say rate reflects risk, right? The interest rate that you get personally or for your business depends on a variety of factors, including time in business, the overall credit profile of your company, credit scores, and all of those things. So, there's many factors other than just the economy that can affect the interest rate that you're gonna get when you go into your bank or financial institution.
Okay. And for full disclosure, we are speaking in early October, just to make that clear, because everything is time sensitive. So yes, the 0.5 point reduction from the Feds is welcome news, and hopefully that continues moving forward. So commercial rates, you said commercial rates are based on company credit. Let's start there with commercial rates, or continue the conversation with commercial rates and what you can share there.
Yeah, so like Cory said, it's depending on the credit strength of the company. So if you have a company that's been around for 65 years, they have a long history of borrowing, paying back on those notes on time and in full every month. That's a different risk rating from a lender's perspective than a company that's 3 years old, has very little borrowing history. So it's the rate kind of matches where the company is. That's not to say newer companies necessarily have to pay astronomical fees. That may not be true. You know, you can have a strong company that's newer. You can also have a company that's older that's not as strong as you might guess. But in general, what lenders do, specifically in the commercial space, consumers are a little different for personal loans. But in the commercial space, they look at the company, the strength of the company, the perceived risk of that company not paying their bills, and then the rate reflects that pretty directly.
I would also encourage viewers to, go check Mac's article out from 2022. Some of the information, the 5 C's, as I recall from the article, with what lenders are looking for when a prospective buyer is coming for a loan.
Thanks for bringing that up. That was a fun article to write. It's, when you don't do something every day, it's not always on front of mind or obvious. So that article is just trying to explain, hey, when you go into a bank or you go to a private lender, and you're saying, hey, I'm trying to buy a pump hoist or a drill rig or whatever it may be, what are they thinking, right? The person across the table from you, what is their mindset? Why are they hesitant to approve this? What can you say or do to kind of move that process forward? So that was what that article was about. And yeah, it's the C's of credit, just kind of explaining people in our industry how we look at things. And so thank you for bringing that up. That was a fun article to write.
Yeah, for sure. Real helpful article there. And what are you guys hearing from your customers now as we head into the final home stretch of 24 and 25?
Yeah, the end of the year always picks up in our industry. So generally the last 3 months of the year are the busiest. There's several reasons for that. There's tax implications. People sit down with their accountant. They say, hey, the end of the year is coming up. What moves do we need to make as far as spending money, saving money, planning for next year? I think there's just sometimes people are working all year, just kind of doing what they do. And then they wake up one year and go, I actually really need to, that thing I've been planning someday. Well, that someday arrived now. And for whatever reason, human psychology, whatever it is, kind of the end of the year, a lot of people make purchases, or maybe they've been saving all year to have a down payment, something like that. So we've seen a business kind of pick up recently, and we're expecting that to continue through the end of the year. But our customers, we're very lucky. They're good people. One of the reasons I love this industry so much, it's solid, good people. And any conversations I've had is nothing but positive.
Mm-hmm. Cory, let's jump into commercial and personal debt, the difference between the two. Mac, you can jump in as well, but acquiring assets versus just buying things. Let's start there on your thoughts.
Yeah, I think that kind of goes with what Mac was just talking about, right? What we do is a little bit different than, say, a mortgage lender or other commercial bankers that may be focused on real estate. For many of our customers, equipment it's essential. Sure, you want to make sure that you're getting a good deal with respect to rate and fees and pricing and all of those things. But at the end of the day, if you're drilling water wells, you got to have a drill rig. The other thing that I would like to add is the equipment, it generates revenue for your business. So if you are considering financing equipment, you can kind of figure out that the equipment's going to pay for itself essentially for that period of time. So again, what we do is a bit different, and I know Mac, you really enjoy talking about that subject too. So if you'd like to jump in there.
I do. Yeah. A lot of people, sometimes again, if you don't work in lending, it's not something every day. It's not always front of mind, but there is a very big difference. Me personally, if I'm going to get a small loan to buy a set of furniture, that's really just money that I'm paying to have something, right? If I'm running a business and say I'm bringing on a new drill rig, that loan is getting me something that's actually going to make me money at the end of the day. So it's very different when you're approaching commercial lending versus consumer. You're not just, a very informal way to say it, you're not just buying stuff. You're actually adding assets to your business that'll help your business grow, help you increase revenue, which ultimately, hopefully, leads to increased profits. So that's just kind of a mindset thing I think people should be aware of. Is you're talking about two very different things. If you're getting a loan to remodel your kitchen, hopefully your property value goes up. I don't know. I won't speak to that. But versus buying a pump hoist that literally is going to allow you to go out, work, invoice your customers, bring in revenue. So when you're planning, you're looking at the budget of how much can this equipment bring in? What is the monthly payment on that? And then that spread, great, I get to keep that. And that's now added to me operating my business. So financing can be a very powerful tool as far as acquiring assets that help you grow, help you run the business. It's not just kind of signing up for debt for no purpose other than you want something new. It's actually a crucial part of running a company.
Sure. And with it comes cash flow. As you've shared, cash flow is the name of the game. So, to make that point known.
It is, yeah. So, running a company, cash flow is the lifeblood. There's so many things. You got to pay employees, you got to pay yourself. Emergencies pop up, repair costs, all sorts of unforeseen things, and you have to have that cash there every month, able to write that check and pay for those things. So it's oftentimes in business, just because you have $200,000 sitting in the bank doesn't mean you can go write a check for $200,000 to buy a new truck. You may actually need to hold on to that cash for all these reasons. So business owners typically monitor their cash flow very closely. They're looking at, hey, it's great, there's all this money in the bank, but also it's there for a purpose. There's things that are going to come up that I need that cash for. And if I run out of cash, it's not good, right, for business. So cash flow is the lifeblood of a company.
Yeah, the industry is continuing to grow in this area of business management and pricing their services appropriately to help with that cash flow. And the association's here to help in that regard with products like NGWA Business Pro, an app that helps manage an accounting software management software platform. So, 20, like you said, you can't foretell the future. Are there any practical things you want to share with viewers on 2025? Some housekeeping things for their business management to when managing their business to keep in mind as we close out the year and into 25, since there's some uncertainty with, things on the horizon with supply chain issues already starting to surface with the after effects of Hurricane Helene and Middle East crisis.
Yeah, I think really a very, very basic thing, Mike, that I, tell people when they ask that question is, if you don't know your banker, it may be time to evaluate your banking relationship. I know that sounds really basic, but every business owner, Mac was just talking about cash flow. You were talking about accounting software. Those things are certainly important, but your banking relationship is very important. Your banker should know you, should understand your business, and want to understand your business. So that's the number one housekeeping item that I always bring up. With respect to supply chain, interest rate environments, geopolitical factors, and other things, we can all have our opinion on those things. But at the end of the day, I think just running a sound business with respect to being organized, preserving cash, managing your cash flow, I think those are the things that you can control those things. A lot of those other factors are beyond your control as a business owner. Certainly be aware of them, but I don't know that that's a place to focus your attention. Again, it's fantastic, and you want to encourage people to be educated, but I think there's other things to maybe look at first.
Yeah, that's sound advice.
Absolutely.
There.
Yeah. I like you said, Cory, control what you can control. One thing Cory and I have talked about this to death almost is having good record keeping, making sure your books are up to date. Make sure you meet with your accountant or your CPA often, know what's going on, be intentional about that. One thing I always try to suggest to people is keep a up-to-date, a running debt schedule. Every month, what are we paying out? Who are we paying it to? What's the term? What's the rate? When does that loan end, or when does that lease come due? Is it 6 months? Is it 2 years? It's this is very important information, and oftentimes I think business owners, they're doing so much running a company. There's so many things going on. There's so many fires that are immediate. It's easy to let that kind of fall by the wayside for a month or 2 or 3. Before you know it, you're going to buy a truck. The lender asks, "Hey, tell me about this, this, and this," and they go, "Oof, let me find out. Let me do some research." I think it's healthy. It's beneficial to kind of be more up to date with your bookkeeping, your knowledge. Like I said, one thing I always suggest people is keep a debt schedule. You get a new loan, put it on there right away. Then every month when you're getting random invoices and who are we paying to what, and it's confusing, you can pull up one document. It's all right there listed out. I think it's a powerful tool that a lot of business owners use. Some, again, they have so much going on. It's an easy thing to let slide. But I think it's very important, and that's something I always suggest to people is, hey, I can't tell you how to run your company. You know that better than me. But just one thing from talking to a lot of business owners, the ones that do that, just kind of have a quicker grasp of what's going on in their company. And the ones that let it slide, they're a little unsure. And when you're running a company, you want to know what's going on. It's you pour your life into it, and it's important to kind of have that knowledge ready at the forefront of your mind.
Absolutely. Yeah. With that regard, that debt schedule. That's
Debt schedule.
Debt schedule.
I talk about it too much. With some of my customers, they give me a hard time. They go, "Stop telling us about the debt schedule." I say, it's really important.
Lastly, is there any unique business methods from contractors that you've heard of, discovered while being in the industry that might be applicable to the rest of the industry you'd like to share?
Well, one thing that I would say that we see a lot of in groundwater is folks coming to us wanting $200,000, $300,000, $400,000, $500,000 for a drill rig or a truck or something of that nature, and they have no commercial credit established. That presents a set of challenges to us from being able to secure an approval for our customers. It doesn't mean it's impossible. It just means that some of the things that we've already touched on in this presentation or our conversation here are very important. Mac mentioned a debt schedule. We're talking about keeping financial records, talking to your accountant, managing your tax returns and your balance sheet and your profit and loss. All of those things are really, really important when you're needing to borrow $500,000 potentially. Mac, you work with a lot more groundwater customers essentially than I do. I see more of it from an asset management perspective. We see requests for used equipment. We do a lot of homework and evaluation on those things. I think Mac can probably speak a little bit more directly to the business owner and consumer experience in this industry.
Yeah, thank you, Cory. The kind of piggybacking on your point of commercial credit, one thing that comes up a lot is, and it's with us as well as other lenders, other banks, is application only programs. And kind of one thing that happens in groundwater is often there's companies that come to us, they've been in business for 60 years, 3 generations in, they have a long history of borrowing, and when they apply, they're approved just on that application. And then there's customers that do that. Often there's a lot where they've been in business a long time, but for whatever reason, maybe they've bought things with cash a lot, or just the type of lending they've done doesn't show up on these reports that lenders pull. And so what happens is they come in and they say, hey, we've been in business for 30 years. And then when the lender starts doing research, they say, well, we didn't really find any commercial credit history. And then like you were saying, Cory, that leads to asking for tax returns and financials and that sort of thing. So I think there is a benefit to establishing commercial credit and just kind of having that history. That way, when you do go to buy, instead of a used drill rig for $300,000, you buy a brand new one for $1 million. Lenders aren't looking at you like, well, you've never borrowed anything and now you're asking for $1 million. That's a big jump. There's a history there to show. So I think companies that are establishing that do really well, and there's a great benefit to that. But specifically in this industry, we do find a lot of people where they're great companies, and the moment we get the financials, we say approved, this is great. But on those app-only programs, sometimes there's not that credit history where in other industries, often there is that history.
Gotcha.
Yeah, and the other thing I'd like to add is there are all different types of structures when you're talking about commercial lending. There's a very straightforward loan, just like you'd go to, you get your car or something of that nature. But there's also a true lease, and often called a fair market value lease, that gives you options at the end of the term. You could potentially return the equipment, buy the equipment, or continue to, make the rental or the lease payment. That structure is appealing to business owners for a variety of reasons. So, our advice is, when you're considering a different type of structure or something, just communicate with your accountant. There could be some big advantages to different types of structures. And again, I mentioned it before, know your banker, be able to talk to your banker about those options, be educated in those areas, because there's a variety of things out there that could be appealing to different business owners.
Good deal. Yeah, that's good advice there. Well, guys, as we wrap up, you'll be at Groundwater Week 2024 at booth number 362. So, yeah, we look forward to seeing you there at the show. And anything you guys want to share on that front?
Just that we're excited. Come by. If anyone's listening to this, come by and talk to us, even if it's just to be social and say hello and joke around for a little bit. Cory and I, we play serious banker, but we're good people. We like to meet and just visit with people and catch up. So I would encourage anyone and everyone, even if you're not actively looking for a loan or you don't have some finance question, just say hello. Booth 362, either Cory or I will be there pretty much at all times. One of the two of us is there. I don't think we both leave the booth too often. So you roll the dice which one you're going to get, but we'll both be there.
Yeah, we enjoy that event. It's one of my favorites to go to. I'm fortunate to be able to go, and I'm grateful to Mac for getting me involved in the industry. I learned so much at those events. Again, as the asset manager, it's fantastic. We're looking forward to it, and we're so grateful to be involved.
Yeah. Looking forward to seeing you guys out there along with all the other exhibitors. We'll see you in December in Vegas. Thanks for watching and listening to the WWJ Industry Connected Podcast. We'll be back next month with a brand new episode, so be sure to like and subscribe to the podcast on your favorite podcast platform. We're on all the major platforms, so it will be easy to find us. And visit waterwelljournal.com for the latest expert columns, feature articles, videos, and news covering the groundwater industry. So one more time for Mac and Cory, thank you for watching and listening, and we'll see you next time.